Hey y'all, it's Christian here. I hope you're doing well. It's Wednesday, May 13th. The Bitcoin market is giving us a classic last training consolidation, currently holding at $81,026. While the crypto charts look steady, the broader financial world is flashing some mixed signals. We have a conflicting situation where the stock market is showing signs of exhaustion, while technical patterns suggest there's still a fight left in the current trend. Today, we're going to objectively break down how the SP 500 may be signaling a shift for Bitcoin, and which specific candle patterns are keeping the bulls hopeful. Let's dive into the data. Looking at the Bitcoin daily chart, we see a complex setup. Up until about 3 days ago, we were tracking a clear bearish divergence, where price was moving up, but momentum was fading. However, today's candle is actively testing the resistance level, attempting to invalidate the bearish signal. When we zoom in to the 4-hour chart, the trend looks even more resilient. The price has been consistently bouncing off the 50-period EMA, and right now we are sitting just above the resistance level. This gives the immediate impression that the uptrend is looking to continue. We are comfortably above the long-term 200-day moving average, but the 50-day EMA on the daily remains the boss we need to beat. With a slightly overbought RSI of 61.27, there's still room to move higher if we can flip this level here into support. To get the full picture, we have to look at the SP 500. The SPY is currently in a deep overbought phase with an RSI of 74.7. While that often precedes a pullback, the SPY chart just printed a hammer candle, suggesting buyers are still defending the uptrend line. Adding another layer to this is the liquidation heat map. We can see significant clusters of liquidity sitting at 81,400 on the high side and 79,700 on the low side. The market often acts like a magnet to these zones, cleansing the liquidity before making a definitive move. If the stock market's overbought status finally triggers a sell-off, these lower liquidity clusters become the primary targets. So based on this data, there are two main scenarios the market might follow. Option 1 is the bullish continuation. In this path, Bitcoin continues to ride the 50 EMA on the 4-hour chart, successfully turning this resistance into a new floor. Since the RSI isn't overheated yet, this could lead to a significant move upward as we hunt those higher liquidity clusters. Option 2 is the fakeout. In this scenario, price sweeps above the resistance to grab the 81,500 liquidity, only to reverse sharply into a bearish trend. This would align with the exhaustion we're seeing on the SPY and will likely lead the price to back down to test the 79,700 liquidity zone. So in summary, we are watching a tug of war. The key is to see if Bitcoin can decouple from the overextended stock market. Watch those liquidity levels and the daily close. Stay objective, manage your risk, and I will see you in the next update.